Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day, all. Ira Epstein of Linn Associates with your financial market wrap-up for a wild trading day on this Thursday, and this is November 15th, 2018, about 4:35 p.m. Central Daylight Time. So when looking at Central Standard Time, I said that wrong. Look at the nice rally in the markets at the end of the day. Actually, the last trades in the Dow were about 20 points higher than this, maybe another point higher in the S&P, the Russell over 1528. I think we're a little lower in the NASDAQ. I was pleased to see this today because I've been looking for the selling to abate from some of the closed-end funds that were trading in these markets. And the reason is the last trading day for getting money out this year without a penalty is November 15th for some of the funds. So they take 45 days. Not all funds work that way. I don't want to give that impression. But, and I'm not saying all closed-end are responsible, but it all fit in pretty well. Now, you know, today on the news waves, if you haven't seen it, it's all full of what's going on in the UK. A lot of fear there, of course, because two ministers again resigned overnight. Miss May, I've been up since 3:34 in the morning watching. I watched the live conference at the House of Commons take place because I knew it was going to affect currency pairs, what it did everywhere else, and it certainly did. So that's one of the things. Energy prices stabilizing is the best word you can use. We're not getting dramatic moves up or down. So when we come to the S&P 500, what would be neat is if the market finishes like this and takes out eventually next week this high of 2779 on a closing basis. Why? You're not there yet. But what it would do is, if you think about it, you have a high, a break low, and I don't know where we're going to finish tomorrow, obviously, the week out. You could be higher for all I know. But on this type of pattern, then getting over that, you had a successful test of the lows or a test of the lows back to wiping out all the gains for the year in the S&P, and suddenly you're back up here. It could set the market into excitement. You know that it appears, the word is appears, that the U.S. is going to sit back for a moment on its tariffs and not impose those 10% ones from China that are on China now to 25%, at least at this point, and not going to impose, from the sounds of it, the additional $267 billion of tariffs at all, as the U.S. and Chinese negotiators appear to get together. Robert Lighthizer, our U.S. trade representative, told the group, according to media reports, that he thinks that's what's going to happen. Obviously, we need to hear it from the president. These numbers, this is a, let's call it a third correction off the low. This one's a 50% correction. This one's 2/3. So the market got back down, fighting at this, if you will, each day, hitting that 1/3 correction point. It might try to work its way back to that 50% level. Let's see what it does. When we take a look at the swing lines, this is called a vertical price drop. If this drop doesn't take out these lows, you've had another test of the October low, and that test hopefully will be it, and the market maybe goes into a year-end rally. I'm still thinking that that could be the case. I haven't changed my opinion on that. When you look at the close today, if you get my newsletter, I said I wouldn't be surprised if the market closes over the 18-day average. Remember, this market was down today to 2671 early in the day, and it did. It got back. So the market's sort of rejecting or attempting to reject the downside. It's not a trend. You have a higher high, lower low. That's not a trend. The bias is up because the market closed over the 18-day average. The next resistance is the 200-day. If we look at the Bollinger Bands, they're very far away. Unless the market goes into a state of collapse immediately, I would doubt you're going to get down there, but that's still against those old lows. But that would be a really ugly chart picture, by the way. Then I'm probably wrong on everything I'm talking about right now. And to get through the 200-day average, just like it doesn't exist on the way back up, it could happen. And then you've got these numbers back in play. But I think they're so far away, they're not going to do anything right here. In terms of momentum, you have worked off being overbought. The numbers are no longer in the 70s. Now, if we go back, here's yesterday. You were out of that too. The day before you weren't. So we've had a successful working off of getting, if you will, this overbought level. And now the question is, can the market muscle up anything? If we also look, you see this gold line? This is where the market closed approximately on December 29, 2017. So we thought we could get a test of it. We did it yesterday. We checked it out today, and we came snapping back from it. The NASDAQ has never gotten down there. That's the first thing. It did not get to its 18-day average, but I would not be surprised at all on any form of an up move tomorrow that comes into play as a resistance point. Again, no trend, a higher high, lower low. In the Dow, you challenged last year's close again. You see that today? You didn't do that yesterday. It found its footing against that, and now the market came back and settled over that 18-day average. So like the S&P, it's not in a trend, but it's sort of rejecting now that downside momentum. The Russell came all the way back today, closed over the 18-day average, trying to get even for the year on that gold line. We'll see if it's able to do it. The one thing that's very evident, we have no trend in any of the stock indices. In the VIX, you failed against the 18-day average. You've been up here and fighting against it now for nearly 4 days. We'll see what that means. I don't have an answer for you. It's a lower low, higher high, just going in a circle, as I call it. December T-bonds, the market still has upside momentum. But if you get the stocks going, the question is, the buying that's happening in these bonds, and a lot of it was safe haven, does it start pulling back? So I question if you're going to get up to that upper Bollinger Band, barring a big break in stock indices now. I'm going to say the same thing in the 10-year note. You don't have to reach into these points. You know, that you could, and the market could easily get up there, and I won't change my opinion. The 100-day in the upper Bollinger Band from 119.04 to 119.06, and you're at 118.26, should offer an area for those that are long to probably take money off the table. That's more my thinking. It's not about what's going to happen, barring the fact if stock markets go down again big. In TLT, you're still bullish here. You've got the higher lows, higher highs. However, you set up a trap play in this market. If you take out tomorrow 113.30, you had an outside day up. If I can get back, if this will let me do it, let me just try this, come back to it. Yeah, there we go. Okay, sometimes you have to do that. You had an outside day up on Wednesday. Today the market has, let's see, market has a higher high day, finishes a little lower. If you take out 113.30 on an outside day up day, often, I'm never going to use the word always because it doesn't work that way, but often that's a sign that you've caught a bulls up here, and it puts into play, because there's no other major average under the market, a potential of getting back to the lower Bollinger Band or a thrust towards it. In the dollar index, it's like a market that ran out of momentum. Yes, the market, I could argue it's got a higher high, higher low. I can also argue it doesn't, because this day came down under that point. The resistance is still the upper Bollinger Band. The bias, if you will, well, let me use the right word. Momentum is pointing down, bias is up. But should this market take out yesterday's low, and that low is 96.58, and not go back through these highs, you could have lower highs, lower lows. Close under 96.45, and you could go home with the market setting up for the first sell signal way back in time. I'm not saying it'll happen, but you always look ahead on a chart trying to figure out what's going on there. In the eurocurrency, the flip-flop is not here. Even if you get further rally, the resistance at the 18-day average is there. You got the higher high, lower low, and of course you've got the drag of Brexit on the market. And here's the British pound. Now, when we look at the action today, it's pretty clear you've got lower highs, lower lows. Coming into today, you had a pattern of higher lows, higher highs. You can see that. You ran yesterday to the 100-day average for the resistance point. Now, nobody knew what was going to happen, obviously, going home. But what did happen is 2 ministers resigned. Ms. May was in front of the House of Commons today, and it's not looking good. It's that simple. And the market responded by, on the close, being down 1.84%. The obvious target to me, if the market can follow through, is the 127.12 area, the lower Bollinger Band, with resistance being back at 129.54, and you capture everybody if you get over 130.92. It's a very volatile market. In the Japanese yen, you lost the embedded reading, and I think getting up to 88.61 within 6 points of the 18-day average proves that the thrust was made. I'm not saying it doesn't do that number. It still does as far as I can, as a chartist. It's out of a trend. Momentum is to the upside. The bias is to the downside. It's a confusing chart. In Bitcoin, you tried to come back $60 today after declining yesterday 920. So this breakout to me is real to the downside. That's the first thing that I look at. Then I go at it as a technician. I'm oversold. I'm under the Bollinger Band 2 days. It gives me only a 3% chance of staying under it tomorrow. You can do that. But I think the market eventually is going to fight to get over the Bollinger Band and then reset up possibilities. The bears are in control of this market. It's oversold. That gets resolved one of two ways. It either embeds, which it's far away from doing, or it corrects by getting a sideways or a bit of a rally in it. In the WTI versus the Brent, you can see we're just hanging here over that 18-day average. It still favors then Brent being stronger than WTI. Here's what I'd be honing in on. Until you lose the embedded reading, the market is still in the bear trend. I realize you got the lower lows, lower highs. Lose that and you put into play the possibility of a son of a gun rally. That's what you got to be careful of. I'm not predicting it'll happen. It's the possibility. I'm going to say the same thing in the WTI. You're going to see what I'm saying when you look at the natural gas. You still have the embedded reading here, and that's what I care about until that is lost. Here's your nat gas. This is yesterday. Way up over the upper Bollinger Band. And how many days? We're day 1, 2, 3, 4. You have 4 days over. What were the odds of staying over the Bollinger Band? And I realize we had all this news, the market's up dramatically, 18%. 1% chance for the 5th day. Could happen. Market down 17.46% today. It's a rubber band. You pull it and you can get in trouble. That's all that I'm saying. And this was an unbelievably heavy volume day today. Could the market now get back to the 18-day average? Take the name off the chart. That's what I'm expecting. Combination of that number going up, this number going down. Doesn't mean it'll happen, but that's what I look at. Pivot points. If you're an in and out trader on the S&Ps and the Dow, this is something you should look at. It's that simple. We've been looking at it in the office during the day, and I have some brokers that they follow this stuff pretty religious. And they were showing me trades today coming off the wall that it was throwing out signals. And if you'd like to see what that means and get a feel for it and learn it, give us a call. Go to our website. We have a 3-part video series. It's free. You can get that. You can click up here to get to it. And yes, I'm bringing on another indicator for you to look at, the Arun indicator. I'm finished recording it, so it'll be out next week. Look for us to have something on it. I can't tell you the day with Thanksgiving coming up, but it's ready to go. I'm Ira Epstein. Sorry for a long update. You have a good day.